Okay, normally what happen is that the activities that happen first, okay, when before the sales are being generated and so on, normally the customer will, can you all see my screen on the documents in the PDF? I'm showing now CRNE car accessories account.
Yes, madam.
Okay, good. All right. So what happened is that, all right, the company name is Prozac Garment Sdn Bhd. Okay, so Prozac Garment Sdn Bhd received an order from their customer CRNE Car Accessories. Okay, so in this case, they send in a letter request for an order. All right, the garments order lah. So normally in the order, they will specify. And normally when your company receive an order from your customer, you will come out with a quotation. Okay, you will come out the quotation. So this is the title of the quotation. All right, and some company quotation also got numbering, but some company did not have numbering, but it's not that important for the quotation to have numbering. Okay, because quotation is like it's not document that being used to record as a basis to record any transactions. So that's why it just depends on the company. It's okay to have and not to have. All right, so normally on the quotation, you would able to see, okay, the name of the products, right, the description of the products, and normally you would have the quantity, how many quantity that they ordered whatsoever, and the unit price. Okay, the unit price is actually must be based on the authorized selling price. Okay, so this is one of the control measures, meaning that all the pricing must be used the authorized pricing as defined by the company. So based on this, okay, you give whatever the total lah. So if you have SST, then you also included everything and so on. So basically, the client will able to know how much they need to pay for the quotation. All right, and normally quotation also have validity, okay, how many days from the issuance of the document, etc. Okay, so once the company receive the quotation, okay, the client receive the quotation and they agree with the quotation, and of course they will confirm the order. So on the side of the company, they will issue sales order. Okay, sales order, okay, normally would have numbering. Okay, this is where the starting point, the document must have numbering. Okay, because the numbering is also one of the control measure to ensure that all the documents that are being issued are being recorded inside the system. Okay, so later I will show you the ledger in general how the sales journal looks like. All right, so these are the number of the sales order. It must be in sequence. And normally on the sales order, you have the name of the client. Okay, you have the reference number. This is actually the client ID or customer ID. Okay, so this must be unique. All right, one customer is one ID. All right, because when you key in inside the system, means that you know, okay, what are the customer ID. So whatever relate to that particular customer, then you will use that particular ID or that particular account. Okay, all right. All right, so these are the sales order. So on the sales order, it again will specify the same details of the product that they have already confirmed, how many the clients want. So in this case, they order for 250 and then they confirm they want 250 at the price already agreed, 60 ringgit per unit. Okay, so you see the quantity and the unit price are the same as per quotation. All right. So this is where, if let's say when you do the audit, you want to check mathematical accuracy. Remember, one of the audit objective is accuracy, right? So you can test check, all right, the calculation. 250 multiplied by 60 is 15,000. 15,000 plus 15,000 is 30,000 and 10% SST. So the mathematical accuracy is correct on this particular document. All right, so that is also another thing that auditors also check when look at the document. All right, so when the sales order are being received, so now either they take from the stock, all right, they see whether they have the available stock. So once the stocks are available, of course, they make it ready for delivery. So when you make delivery, you will issue delivery order. Okay, so the title of the document is delivery order and also must have numbering. Okay, delivery order also would have their own numbering. So in this case, this is the numbering for the delivery order. Okay. In practice, normally every DO would also cross-check with the sales order. So normally here they would have one more document, reference or information, SO number. SO number what? So they will actually cross-check to this particular SO 000025 in the delivery order. So that is easy to cross-match. Okay, cross-match against the document. All right. Okay, so here you have the delivery order numbering. So on the delivery order, so that means now here what you want to confirm? You want to confirm they order for 250, they delivered 250. Okay, they order just now for 250 and now they deliver for 250 pieces. All right, so you have to confirm. When we do audit, we cross-check. All right, is that correct? They order 250, you deliver 250 because later on, you want to see how much will be invoiced for this particular customer. So if you notice on the delivery order, is only quantity is being mentioned. Okay, it's only quantity that being mentioned because you delivered quantity. All right, physical quantity, how many? Okay, there is no need of unit price whatsoever. That is on the delivery order. So once the delivery has been made, okay, so most of the time, one more thing, that another control that you have to take note is that here must be signed. Okay, received in good order and condition. Okay, so here must be signed. Okay, why it must be signed? Because this is the proof that the goods has been delivered to the customer. Because in the case of the dispute, all right, let's say sometimes you have dispute, right? When you invoice and then client say, hey, why you invoice extra? I only received this quantity, but you bill me this quantity. Okay, so when there is a dispute, then delivery order will be checked, okay, in terms of the acknowledgement of receipt. Okay, so that's why normally it's very important to confirm that the goods has been received in order and condition, so that when there is a returns or returns of any goods, therefore you would have to remarks against this document. Okay, so this is also one of the control measures that commonly being used, okay, to confirm that the ownership has been transferred. Okay, so this is one of the important point because ownership has been transferred. So here is also another point where your company can start recognize your sales. Okay, at what point? Remember on the revenue recognition, at what point you want to recognize your revenue? So this is one of the point that you can start recognize your revenue. Why? Because the ownership has been transferred from one party to another party. So means that now goods belong to your client. Okay. All right, so once the delivery has been made, okay, and has been confirmed, has been acknowledged on the recipient, so now your client can start doing the invoice. Okay, so again on the invoice, you must have invoice pre-numbering. It must be numbered, okay, in sequence. And then normally on the invoice, you also have a cross-reference to the delivery order, meaning that this invoice is for this delivery, so that when you give this invoice to your client, client can also cross-check against the delivery order document. All right, for which delivery are you invoicing? Okay, why this is important? Because it's very important, especially when there is partial delivery or batch delivery, meaning that when the order 250, they delivered in stages. Okay, hence, if let's say you deliver in 2 stages, then perhaps for this particular invoice, you would have 2 DO number. Okay, all right. So vice versa lah. So it depends on the situation. So again, what do? We cross-check the name of the client is the same as per the DO. Okay, is it the same as per DO? All right, this one, right? Because you invoice for the goods delivered, right? Okay, and then is the quantity is the same as what you delivered. So here you delivered Lakers polo shirt 250. Okay, and then here also you bill for Lakers polo shirt 250, and price per unit must be tallied to the quotation just now that you have already issued in the beginning. Okay, all right, because this is the authorized price that must be used in billing, which is tally back to the authorized price list. Okay, what I mentioned here is all those that I want to emphasize that you must take note. Yeah. Okay, another thing that you can see on the invoice is what? You can see the terms. Okay, here is the terms. What is term? Okay, term is actually your credit policy or credit facility. Meaning what? Meaning this is the date of your invoice, 13 February 2006, Y06. Okay, so meaning that within 30 days from this date, you must settle this amount. Okay, you must settle this amount. That is what it meant. Okay, because why? Because this would also determine your aging. Okay, account receivable aging. So since this is the amount, the sales that incurred in the month of February, so it will go in the column of February. Okay, if you remember your lessons in management accounting fundamental long time ago, okay, whatever sales in the month, then you capture in the month. So again, on the invoices, okay, you would have your subtotal, SST amount, and also total balance. Okay, so this is an example of invoice. So in general, those are the common documents that being issued in the cycle of revenue. Okay, sales and the revenue and also account receivable. So based on this invoice, it will be captured in the ledger. Okay, it will capture in the ledger, or we start with the journal, and from journal it goes to the ledger, which is finally financial statement. Okay, how does it looks like? Okay, so here when you do your cross checking, okay, to the records of the ledger, so this is an example of invoice listing, which is actually extract from the sales journal. So in the sales journal, what happened is that you would have your PO number. Okay, PO number is actually coming from your client. You have your sales order number. Okay, you have your sales order number. Okay, so here you can actually see, if let's say you want to test the control of the company, right? Okay, you want to see whether is there any issues in their sales order, meaning that what are the possible issues? Okay, they keep generating sales order, but it's not being translated into actual sales. So many of the sales order has been cancelled. How do we know that? We can cross-check here the numbering. Okay, so by right, it should be running in numbers, in sequence, and then now suddenly it's not running in sequence. So these are the query that we can actually raise to the client. Okay, so from here you can see that okay, so these are the one that we are looking at just now. So the PO number is CRE 2122. All right, so the sales order is SO 25 just now. And then the delivery number is DO 363602 and DO date is 52. Okay, and then invoice, these are the invoice number. This is the invoice date. Okay, my question, can the invoice date is earlier than delivery date? Okay, can the invoice date be earlier than delivery date? Can or not? Think about that, Okay, that is also related to control measures, All right, so you see here, it's all must be in sequence and match. So if you remember in one of the slides, I did mention about matching the document. Okay, matching the document between sales order, delivery order, and also invoice. So that is what we did in order to ensure the accuracy of the information, final information in the invoice, meaning that whatever the quantity that they order, That is what being delivered, and then that is what you bill out to your customer. Okay. So that is one. Okay, to ensure the accuracy, to ensure the completeness. Okay, and also valuation. Okay, one more thing, you also want to ensure the completeness, that all the documents that has been issued or transactions that has incurred has already been recorded properly. So what do? We take all the document, the 3 documents just now, and we trace to the sales journal. Okay, so when we trace to the sales journal, then we can see here, then we see this entry. Okay, so when we see this entry, then we already can confirm that, all right, the document, the transaction has been recorded in the respective journals, accounting records, and also ledgers. Okay, that's one. Okay, another one also you want to confirm, all right, because this is a transaction that happened in 13 February, right? So here is also you want to confirm the date of the records. Okay, for instance, when you do cutoff date, okay, the cutoff date, so you see here on the document, okay, it stated that it is on the, let's say, you are talking about 2000 YO26, okay. So now you are checking for Y025, okay, Y025, which is the year before. So if you are talking about Y8026, if you have any document from Y0 to 5, is it possible to be included in the ledger of Y0 to 6? By right? No, right? Because it's a different timing. Okay, it's a different accounting period. Okay, so that is also one way of how to cut off test, whereby when you check, okay, you can just sometimes scroll, or if you do analytics, much easier lah. Okay, much easier. In fact, when you sort here also you can see, okay, any particular date, Y0 to, here is year end, right, 31st December. That means you only include Y0 to 6. It shouldn't be any with the Y0 to 7. So if suddenly you see one item, Y0 to 7, meaning that is wrongly being included inside the ledger. Okay. Sometimes by simple doing that sorting also, you can actually testing certain issues. Okay, and here, if let's say the year started 1st April Y0 to 6, so meaning that all the accounts that must be included should be Y0 to 6, and suddenly you find Y0 to 5, meaning that is one of the document that has wrongly been accounted for in that particular financial year end. Okay, all right. So that is example of how from the transaction, for one particular transactions, what are documents that being issued and what normally auditor looks for on particular document and what actually we do on the particular document. Okay, one more thing that I forgot just now is that, okay, I just want to highlight one more thing. Okay, one more thing, for the documents to be issued. Okay, just now here you see all this authorized signature. Okay, so but now a lot of documents are being auto-generated by the system. So you might not be able to see any signature. Okay, but in the past, all right, this authorized signature is also one of the control measures. Okay, one of the control measures that we actually see whether the document is actually being prepared by the staff in charge. Remember, there's one control measure talking about segregation of duties. Okay, A should do accounts receivable, B should do accounts payable. So B should not do accounts receivable matters. So that is one way of how we want to check. We check the authorized signature. Okay, we check. It means that all the documents related to accounts receivable, sales transaction are being signed by this particular person. Okay, so that's why sometimes when we go for audit, before we start our test of control, we in fact get signature or sample signature of the person in charge in that process who they have the authority to authorize. Okay, because we will compare that signature against signature on the document just to ensure that the one that signed the document is actually an authorized person. The one that issued the document is actually an authorized person. Okay, all right, this is an example of ledger just now. Okay, one more thing. Nowadays, okay, inside the records, inside the ledger also, sometimes you might be able to see the staff ID, who do the recording, okay, who do the recording and what time they do the recording. That also can be traced, okay. And then why is that important? Okay, because that is also one way of how we want to cross-check when is actually our employees doing their work. Okay, they keep claiming for OT, but actually the work is done much later. They did not do their work during the OT. That is also sometimes another example how you want to test check certain controls, certain issues in the company. All right. Okay, so this is an example of the ledger. Okay, so normally from this ledger, it will be transferred into sales revenue. So from that sales revenue, hence it will actually goes to the account receivable. So basically when you do the entry, you will debit your account receivable, credit your revenue account. Okay, any questions so far on the process? Okay, any question on the process just now about the document issue, flow of the documents, the recording and so on?
Madam,
Yes.
just now that you question whether invoice date can be issued earlier than delivery date, right? So what's the answer for that?
Yeah, I nak jawapan you. Oh. Cuba bagi jawapan. Apa rasa, what do you think? Do you think it's possible to do that?
Cannot.
Yes, Aida.
Cannot, madam.
Cannot. Okay, why cannot? Boleh tak bagi jawapan? Try dulu.
Because the goods must be delivered first to invoice the date.
Okay. Theoretically, all right, theoretically, the good process is that, as what I mentioned just now, okay, people make an order, you fulfill the order by delivery, and then after that you invoice. Okay, but there are cases whereby I am sure sometimes you notice that when you purchase something, you receive the delivery order, you also receive invoice simultaneously. So the date of the DO and the date of the invoice are the same. Is also acceptable. Okay, so is that possible to invoice first, okay, before you make a delivery? Sometimes it depends also on the terms and conditions that you agreed with your customer, because sometimes what happens is that in business, because we are talking about reality in business, sometimes you know that that particular customer, they really needs the goods, okay, they really need the goods from your company, but you have little trust on them, okay, you have little trust on them, so you want them to pay first, okay, you want them to pay first, but they cannot pay based on the delivery order. They need, in order to pay on their side, they need an invoice. So that's why sometimes they would ask for the invoice first, means you wait for the payment, then only you make the delivery. So sometimes in practice, okay, it depends also from case to case basis, okay, but of course when you go and audit, you have to get an information in general what is the common process of the company, okay, what is the common process of the company in terms of the issuance of the document. That is one. Okay, secondly, okay, the most important thing is that you also, when you do test of control, you also have to check what is the basis of the document that normally being used to capture revenue. Okay, so as I mentioned just now, because this is important for your sales cutoff test. Okay, because your cutoff test is actually based on the cutoff document. Okay, and also so it would from the document, then we know what will be the cutoff point. Okay, what will be the cutoff point? Okay, here if you recall just now, I mentioned about when you deliver, you already transfer the ownership. Okay, you already transfer the ownership of the goods from you to your customer. So legally, okay, so legally, once the ownership has been transferred, the liability has been transferred to that particular client. So that's why at that point of time, if your business want to start capturing your sales, it also possible. So that's why in the business, okay, some company are using delivery order to capture their sales, but some company they use invoice to capture their sales. Okay, so again, it depends on the practice in the business. Okay, what will be the cutoff point? So what will be the cutoff document? But either way is actually acceptable. Okay, so if they want to go for capturing the sales based on the invoice, it's acceptable. If they want to capture based on the DO, is also acceptable. Just that when you capture on the DO, remember just now DO don't have the amount. So that's why in some company when they issue DO, they also issue invoice because they want to capture based on the delivery point where they need the amount to be captured. Okay. All right. Okay, that is one. Okay, another one that I would like to also mention, emphasis here is that in terms of the audit testing that you need to do. Okay, there are 3 audit testing that you need to do. Okay, let me open the whiteboard. Okay. Okay, I am sharing the whiteboard now. Can you all see that?
Yes.
Okay. All right. When talking about audit testing, okay, audit test ada berapa? Audit test we have 3. First is test of control. Second is substantive testing, and then another one is analytical procedure. I go to the easiest one. Okay, analytical procedure when you make comparison. Okay, when you make any comparison, but at the level of revenue, individual account, normally we are comparing more on that particular item. For instance, if you are talking about to make comparison for the sales, so perhaps your sales you have more details. Sales, export sales, okay, and then you talking about local sales, and then you analyze last year and this year, okay. Or sometimes you go by products, okay, sales of product A, sales of product B, sales of product C, compare last year, this year. Okay, because you want to further understand the patterns of the sales in the company. Okay, that is one. Another one that you would do is actually ratios. Okay, so ratios is also under ethical procedures. Okay, ratios that relevant to sales and also accounts receivable is that you want to know, very common is the sales turnover. Okay, how fast your sales turnover, because the faster your sales turnover, that means your inventory should also be faster. Okay, common sense, all right, logically, when your sales are faster, that means within 20 days, your sales are, you're making your sales, right? So that means your inventory also, turnover also should be faster. Okay, so that means when you audit your inventory, you should see the same pattern. But if you see different pattern, contradict pattern, and that is where the trigger point, why there is an issue. Okay, there is a trigger point for a possible issue there. Okay, because the story does not jive. Okay, the story does not link. Okay, another one of the ratio also that also common is when your sales is you're talking, because sales will be affecting your accounts receivable, right? Because that is the double entry. So we want to see your accounts receivable. If sales are increasing, by right, accounts receivable are also increasing. But what if your accounts receivable is decreasing? Okay, what if your accounts receivable is decreasing? Is it possible? It is possible if your accounts receivable are paying on timely basis or earlier than your credit terms. Okay, so how you want to cross check? You check your credit terms number of days. Okay, number of days that accounts receivables are being turned over. So that is also another story that you want to look for. Okay, that means you want to see logically if the sales are increasing, accounts receivable are also increasing. Okay, so if it is decreasing, what is the story behind? So that is what you can get by doing analytical procedure. Okay, by doing ratios, by also doing comparison. Okay, because from there is also can give you some story that would actually can be a trigger point when you want to do further audit procedure. Okay, another testing that is being done is test of control. Okay, test of control normally is being done in interim audit. Okay, what is interim audit? Here is your year end. Interim is before year end. Okay, so the final audit is here. Final audit is after year end. Alright, so normally test of control is being done during interim audit. Okay, because you would require testing. What you are actually doing is that you are testing the control. Okay, so normally what happens when you do your test of control, you do your walkthrough test. What do I mean by walkthrough test? Just now I'm telling you the flow of the activity. What happened, what happened, what happened. Okay, so that is also what you are going to do in your test of control. You know the starting point is purchase order from the customer, then you have the sales order, then you have your delivery order, then you have your invoice. Okay, and normally on every document there is a control measure, for instance like numbering just now, signatory, okay, acknowledgement, all right, the quantity, the selling price per unit, okay, the mathematical accuracy. So those are some of the control measures on each document. So that is actually what we are testing. Okay, we are testing the control are exist. Okay, the control are actually being implemented as what they say the management claim that should be their control procedures. Okay, so if when you do the checking, some of the controls are missing, so you take note, those would be the control weaknesses. Okay, so from here you'll be able to identify is there any control weaknesses. Okay, right, because this will be highlighted to the management later on. Okay, so that is what we do in test of control. So in the test of control, normally we do very common, we do for accounts receivable and accounts payable because these are the two major process or business cycle in any company. Okay, all right, and apart from that, of course, later you would have a few other cycles which is also can be tested once in a while. Okay, if you want to do that in your client. Okay, that is test of control. Okay, secondly is the substantive testing. Okay, substantive testing is the one that you did during final audit. Okay, the one that you did during final audit. So in the final audit, what happened is that you do substantive testing. So when you do your substantive testing, you are actually checking the audit objective of the accounts. Okay, so you might do for your sales. So sales would be your test of 10 transactions. Okay, and then you also will do for your accounts receivable. This will be balances, test of balances. Okay, so for the test of transactions, test of balances, you are testing what? You are testing a more or less similar audit objective. You are testing the accuracy. Okay, what else are the objective? Apa lagi? Accuracy, occurrence, it means or existence. Okay, valuation, all right, completeness. Okay, and then presentation or disclosure. Okay, or classification. All right, in general, these are the most common audit objective that you are testing. Okay, in exam, this is how you will be tested. Okay, because what you learn is theoretical part, right? But then normally you'll be asked, okay, what are the audit procedures that you want to do in order to test the existence of the sales, the existence of the account receivable. So that is why you have to link. Okay, from normally you refer to one of the slides. Yeah? Normally you will start with audit objective, then you would have to expand what will be the audit procedure, and then from there you know what will be the audit evidence that required. Okay, for instance here, you are testing the accuracy of the sales. How do you know that the sales in the ledger, remember just now I showed you the ledger? Okay, how do you know the sales in the ledger is actually accurate? Okay, so here this one just now. All right, how do you know this sales, this particular sales is actually accurate? Is it accurate to 850? Okay, is it accurate to 28,500? Okay, is it actually accurate, this amount? Because this is the amount that inside your ledger. So how do you know that this amount is actually accurate? So what do? We go and trace into sales invoice. Okay, we go and trace to sales invoice. So audit objective is to test accuracy of this figure. Your audit procedure is what? Tracing sales transaction to a sales invoice. Okay, you trace your sales invoice to sales ledger. Okay, and then from there you compare the figures of the invoice to the sales ledger. Hence, you can ensure that the figures in the sales ledger is actually accurate. Okay, the figures in the sales ledger is actually accurate. That is one of the audit procedure. What audit evidence that you use here? Okay, what audit evidence that you use? Your audit evidence is actually your sales invoice. Okay, your audit evidence is actually your sales invoice. Okay, so we need that here. Your audit objective is accuracy. Okay, your audit procedure is trace sales invoice to sales ledger. So what will be your audit evidence? Your audit evidence here is sales invoice and also sales ledger. Okay, so that is an example. If let's say, so you know, okay, you know in a particular process, okay, what does it mean by audit objective? How does it link to audit procedure? How does it links to audit evidence? Okay, I give you another example. Okay, now you want to test valuation. Okay, let's say I'm talking about now account receivable. Okay, just now transaction, right? Okay, now is balances. Test of balances. You are testing valuation of account receivable. So let's say in the standard or statement of financial position, you have account receivable of 45,000. Okay, this is gross. And then you have doubtful debt, let's say 5,000. So the net amount is 40,000. Okay, so that is the net account receivable. Okay, so valuation means what? You want to ensure that the value of this account receivable, 40,000, is actually accurate, acceptable, reasonable. It's fair and true. Okay, remember your objective is to ensure that everything is true and fair on the financial statement. So is this true that account receivable is 40,000? Okay, so how do we go and check? Okay, so what we do, this figure, first thing, okay, so when we're talking about account receivable, first thing is that this figure must be tallied to either trial balance or either sub-ledger of the account receivable. That means it's tallied to the accounting records. Okay, so first thing, your audit procedure is that agreed, okay, agreed account receivable balance to trial balance. Okay, agreed account receivable balance to trial balance. That's the first step. Okay, second step, you want to ensure that is this 5,000 is actually accurate or not. So what do we need to do? Okay, normally doubtful debts in a company, there is a policy involved. Okay, what is the policy? All right, they might have, let's say, 5 or doubtful debt. Pattern is normally 5% from the total accounts receivable for that year cannot be collected. Okay, so based on the patterns. So what do? You go and test check. Okay, you go and test check. So normally you go and check the aging. Okay, you go and check the aging. All right, which one is how much is the current balance? How much is, let's say, more than, just now credit terms is 30 days, right? So perhaps you take those let's say above 60 days lah. We give some doubtful, what do we call this, benefits of doubt. Okay, so plus minus, we don't go very rigid above 30 days. Let's say we go for above 60 days. Okay, above 60 days, what is the amount? Okay, compared to the current, compared to the more than 60%, what is the total amount here? Okay, so if let's say this amount is very big, then perhaps you want to argue that 5% is insufficient. But if let's say the amount here is very small, then perhaps this is where auditor's judgment come in. Okay, this is where auditor's judgment come in. All right. So when you make your judgment, is it 5% accurate, reasonable? Is it 5% not reasonable? So normally you go and examine this. At the same time, maybe you also want to look at the business nowadays. Okay, now we are during the COVID and we know that lots of companies having problem. They cannot have sales. Okay, sales are very slow, etc., etc. So perhaps you argue that, okay, 5% may not be enough. Maybe you want to provide for more, something like that. But if let's say during that time economic is good, okay, there is no problem on the economic, then perhaps, okay, 5% sounds acceptable. Okay, so here, this is where judgment come in. Okay, there is no like very objective, means that, okay, that's it. This is the percentage that we use. No. Okay, all right. So that is what we did during the testing of the valuation. So if let's say we after we do all the judgment, after all the checking, and then we come out that, okay, 5% is actually acceptable, so we perform our recomputation. So 5% of 45,000 is how much? How much 5% of 5,000? 5,000. It's around 2,250,000. But now they provide for 5,000. Okay. So after you compute, 5% is 2,250, but then they provide for 5,000. Is it higher? Is it now overstated or understated? Client has made overstatement, right? Because based on your calculation, if a company policy says that, oh, our policy 5%, then you perform recomputation. Okay, you perform recomputation. Auditor's recomputation is 2,250, but then you provide 5,000. Why higher? Then you start asking your client, and then client will give their story. That again, another judgment come in. Is it acceptable explanation given by the client, or is it not acceptable? So if let's say it is acceptable, then you accept 5,000. But if let's say it is not acceptable, you still want to stick to 2,250, then you tell your client, okay, we propose an adjustment. We propose an adjustment, again subject to agreement by client. Okay, whether they agree or not. All right. Okay. So and then after that, after we have come to final conclusion, and then we compare lah. Okay, we compare. Is this acceptable? So this will be the final figure. Okay. All right. Okay, that is one of the testing. Okay, valuation. Okay, another example of testing that also being explained to you is confirmation. Okay, confirmation is why we do confirmation. Okay, because number one, by sending confirmation, we can test the existence of the clients. Okay, we can test the existence of the client. All right, because sometimes from there we can find fishy company. Okay, the address is like something sounds funny because they buy a lot, but the address is the apartment address. So this is sometimes where you trigger some issues. That's why auditors always like you play your skepticism. Okay, you play your skepticism, meaning that you critically look for things. All right, you answer, why? This client frequently order a lot, okay, but then their address is home address. Is it a real business or what? Something like that. Okay. Then we send confirmation. Okay, how do we send confirmation? Normally, we pick up from the list of the balances. Okay, most of the time we pick up the big balance. Okay, but also sometimes once in a while you pick up also small balance. It depends against on your judgment of the client's situation. So when you send your confirmation and then when they return back, you can confirm the existence. You can confirm the accuracy of the balance, also completeness. Okay, why completeness? Okay, because sometimes there are discrepancy on the balance. Okay, you state in the form, confirmation form, 5,000, client come back say, oh no, we owe them 10,000. Okay, so that means now 5,000, is it not being taken up by your client or what? This is where also where you can find some may not be recorded properly, something like that. Okay, or sometimes maybe timing differences. Okay, in your book, you record later. Okay, all right. So you're also testing completeness. Okay, you're testing accuracy, you're testing occurrence, value occurrence, and also completeness. All right. Okay. Another thing is how, let's say confirmation did not come back. Okay, confirmation did not come back if you are using positive confirmation. So what do? Do we still wait? Okay, now you're about the time to signing the account. So we can't afford to wait. Okay, so that's why during the substantive testing, we are also doing we call it subsequent receipt. Okay, we trace subsequent collections made by the client. That is also alternative. Now we are talking about alternative procedure. Okay, meaning that if let's say we have done this, we still not yet get the results, so we want our comfort to make an opinion. So we make an alternative audit procedure. So what do? We go and check, okay, is the client exist or not? How do we know client exists? So what do? We go and trace subsequent collections after year end. Okay, because account receivable is stated as at year end, right? Okay, you know already as at year end, what is the balance? Okay, so we want to know, is it exist or not, isn't it? So what do? We trace. After year end, did the company make any payment or not? If the company make any payment, and then correct lah, it exists. Okay, and at the same time, it's also help you in doing valuation testing just now. Okay, so if let's say the amount balance as at year end is 100,000, after year end they make a payment of 40,000. So now amount owing by the account receivable is lesser. So in a way, do we need to provide further? No, that means we know already the amount can be collected. Okay, so that is also another way of how we do testing, okay, of the valuation. So that's why sometimes in audit, by doing certain audit procedure, it will fulfill several audit objective. Okay, several audit objective. So that's why in your case, okay, I almost want to wrap up because it's almost time for you to do your quiz. Mana pula you punya? Aduh, tak jumpa pula. Okay. Okay, if you refer back to your slides, I'm trying to show you the slides. Which particular slides that are actually important for you is that, sekejap, okay, there are many slides on your okay. Right. There are certain slides that are very important, all right? Because for instance here, all right, this one, okay, because here if you refer to this slide, that's why I put this table, to give you some example. What are the objectives that being used, okay, and what are the procedures that need to be performed. So these are audit procedures for the test of control. Okay, so these are to test this particular control. All right, so these are the audit procedures. Okay, another thing when talking about control here, okay, sometimes another way of how you are being tested is that you are given the scenarios whereby to test your understanding on the what control are deficient in that particular scenarios. Okay, that means question would ask you what are the control deficiencies that happen in that particular scenario. So in a way, how to know what are the control that must exist? These are the list of the control that must exist. Okay, these are the control control measures that must exist in respective in respective business activity and documents as I highlighted just now. Okay, so this is one of the important table that you can refer to. Another one is here is audit program, also can be referred to, because in audit program also tell you what are the important key audit procedures. Okay, this is one more. Okay, so, audit program for substantive testing. Okay, substantive testing whereby what are the audit procedures that you do in order to test the transactions of the sales and map against audit objective. Okay, so this is one of the common audit procedures that normally being done. Okay, and then for the balances, okay, these are the example of the audit procedures that normally commonly being done. Okay, so you can refer here. So here is the audit objective, and then here is your audit procedures. Okay, so these are some of the examples of the audit procedures that normally need to be done in order to test the respective audit objective. Okay, so in short, to wrap up the whole thing, all right, for the account receivable, for the business cycle, all right, you must understand the flow of the business activity. You must understand what are the control that required in respective process and what are the documents that normally required in respective process. Okay, and then once if you understand that, then it would actually help you to be able to do test of control. At the same time also will be able to for you to do substantive testing. Okay, so this is just now as an example. Okay, so perhaps later in some of the topic, I might ask you to do come up with some working paper. Okay, so that will be perhaps in another topic. So for you to get the feel how to do working paper to reflect your audit procedures, okay, the audit evidence, etc. So for you to get the feel how it is actually being done in practice. Okay, all right. Any questions so far?